We've been looking at a couple of reports from the Kenya Bankers Association, which of course tracks in terms of a price index, as well as Has Consult. And the indication is that we've been seeing a slowdown in the rate of increase in terms of prices for property as well as rental yields. Yeah. And from where you sit, if we could just get a sense of where do you feel this market stands as we speak, when we look at some of those key trends, because there's been so much concern around this area.
We are seeing a lot of declining demand, and we're seeing a lot of oversupply in some sectors and then less supply in some sectors. For instance, in residential, everyone knows there's this huge housing deficit, which is because developers are usually gravitate towards the high end and the top markets, but in the low end market there's no enough supply where there's a very huge demand. In the commercial sector, however, we're seeing a lot of oversupply against the effective demand that is there, and so this has been brought about by a lot of speculation. There's a time there used to be a lot of international firms setting up shop in Kenya, and then there was growth in SMEs, but right now we're seeing the economic environment is not very business friendly, as they've mentioned, and so SMEs are suffering as a result. They cannot be able to take up this office space, and so in the commercial sector we're seeing a lot of oversupply but no demand, but in residential we're seeing a lot of demand but not enough supply.
There's a lot of speculative development, and my view is that a lot of developers and investors are not undertaking a lot of property research before they undertake these developments. The market, as Catherine has said, has slowed down. When you look at unpaid bills by government, both national and county, means that there is not enough money circulating in the economy, and that is hurting a lot of the population in Kenya. Therefore, if you look at even the trends, KRA has already indicated there's a drop in revenue from pay as you earn because there are retrenchments that are taking place in the employment sector. So when you try and track the employment sector and those who are in formal employment, you see there is a downward trend.
We associate this with the fact that the economy has not been as vibrant as it has been before. Also around credit, availability of credit. So you get to see some of the clients that we had before, for instance, a Premier Realty Limited, are not able to service or pay up for properties that they have or that they acquire from us. So this really brings a slowdown in terms of the appetite for property in the market, in terms of the property is there, but are people ready and willing and able to actually purchase the same?
Official data shows that the average mortgage size in Kenya is about 11 million shillings. And I did some quick back of the envelope calculations last evening. And if you're working with the present rate of 13% and you take about 10 years to pay off that, you're paying about 164,000 shillings a month. If you extended that to 20 years, then you're paying about 129,000 shillings a month. Very few Kenyan households can afford this. What do you think is the way forward as far as this is concerned? If I could start with you, Kikwan.
I believe that it will be longer tenor mortgages. You've got to go mortgages that are longer, maybe 15, 20 years or 25 years. But also that then will be coupled with what is the age of the person who is borrowing.
Exactly.
So certainly I can't borrow for 25 years. So the person who will borrow for 25 years would have to be literally a 25-year-old or a 30-year-old person.
Yeah.
But I think what will happen is that if there is long-term finance being given to the mortgage institutions, and I think that's what the intention of the KMRC was, the Kenya Mortgage Refinance Corporation, is that they can be able to give at lower interest rates.
What do you think is the way out? And how do we make the mortgage credit facility a Mwananchi product? Because that's really the question out there.
I'll give you an example of what is actually happening with us around selling of land. So you're finding many people are buying land, and most real estate companies who are selling land have given customers installment kind of payments so they can afford to pay. So now they're going back to their partners in the real estate to say, I want land, it's going to cost me £1,000,000 shillings. How do I pay slowly so that I can afford it? So you find many people moving out of Nairobi and the main areas to, Kitengela, Kiambu, and the outskirts. And then after they buy the land, they decide, let me build my house slowly, at my own pace, and at, what I can afford.
Washo?
I think the mortgage issue in Kenya has been mainly because of affordability. Like the houses, as you said, the average mortgage size is about 11 million, and that kind of mortgage repayment can only be afforded by probably about 2% of Kenyans, because according to KenBest, they say about 97% of Kenyans, they earn below 100,000, and actually 75% of that earn below 50,000. And for a person like that, they can only afford a mortgage repayment of about 2 to 3 million houses, and there isn't a lot of supply in the market that costs around that much. So there's that whole issue of affordability. And then the Kenya Mortgage Refinancing Company now is supposed to come in and increase liquidity for lenders so that they can be able now to offer mortgages for longer periods. And we believe that offering mortgages for 20 years to 30 years definitely is going to make them more affordable. And
last week, one particular developer put out a whole 58 pages of properties on auction. And one of the interesting things about this is that I looked at one particular property whereby the guiding price was 18 million, but if you look at the expected rent per month is about 60 million shillings. Now, if you work out that rental yield expectation, clearly there was a challenge in terms of this person being able to service their mortgage obligations. So when you talk about a correction and the valuations now coming back to where they should be, what do you foresee as the situation?
First of all, you see the property auctions are not taking place because of the bubble or the price correction. What the property auctions, and we are seeing a lot of property auctions taking place, is because the economy has slowed down. And what has happened is that most of the people who have borrowed, who are either in employment or doing business, are just going through very tough times. And so they've not been able to meet their mortgage obligations, and that's why there has been auctions. What you will notice is that even the banks that are then putting these properties on auction are also struggling to find buyers for these properties, which therefore then means that maybe they were overpriced, or there is not enough people, or there's not enough demand to buy these properties. In regard to rental yields are for residential properties in Kenya are low. So what you will find is that the rental yields will be between 4 to 6%. But a lot of people who buy properties, if they were to do their analysis on property on rental yields, it doesn't make economic sense. Mm-hmm. In a lot of instances also, the amount you get in rental will not match what your mortgage repayments are, because mortgage interests are high.
Catherine, you look like you had a point to add on to that before I move to Washo.
Yeah, I just wanted to perhaps just give a scenario based on where I come from, and I'll maybe take an example of an area like Raqqa. So I know 4 or 5 years ago, many people went there, bought land, and put up residential apartments. And at that point in time, rent was between 30 and 35,000. However, we've seen many other people do the same. That place has become a concrete jungle. So what has happened? The rents have had to come down. So these people initially perhaps had taken mortgages and loans to actually service their facilities, but now they've had to reduce the rent. I know they're going between 22 to 27,000. And this has reduced the income that they had anticipated, therefore not being able to service their loans as they had expected. Mm-hmm. So I think that's the kind of scenario we're talking about when we talk about what's happening in the rental space.
I see.
Auctions are happening. However, we've seen many more auctioneers coming into the field, new players into the market, because they believe that there's an opportunity. However, like you said, you saw a page of I don't know how many properties, up for auction. But these auctions all don't fall through because the buyers are not there. They don't have the ability to be able to to pay up for these properties upfront. You know, auctioneer will ask for X amount of money. Most people will want to go back and get financing or something like that. So is there a ready market even for the auction? I'm not too sure about that either.
Housing is a devolved function, but it seems that it's still being handled by the national government. How do you see this playing out in terms of the way forward? Because there clearly is a bit of a bloodline in terms of who should be doing what as far as provision of affordable housing is concerned.
Okay, first of all, I would say that the affordable housing program, or what is being under the program, affordable housing is really an urban problem. It is not a rural problem. So my view is that we need to look at solving the housing problem in the urban areas. And that means that you have to look at urban development. We have to look at proper planning within the urban centers. We need to look at capacity building, proper planning in the counties, because that's where the majority of that investment is going to be done. That's where it's going to be done. So the housing has become a devolved function. We need to drive the narrative and the development of affordable housing from the county government, from the counties. Okay. And as I said, that I've done a lot of engagement with both the national and a bit of county government. And there is still a lot of uncertainty and not a good understanding on how this program will be rolled out.